Hello. All right, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade options, stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. For everyone else, welcome back. Appreciate your time. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. All right, trading psychology is important, right? Having a trading plan is extremely important. I would go through that routine every morning. Just review your journal, review your strategies, and maintain a journal, right? If you haven't maintained a journal in writing, right, I would encourage you to do it for the next 3 months. Give yourself a challenge and see if you see any differences in results. You know, in my personal case, it was a huge difference, and I really actually enjoy doing the writing. In the writing, again, the main component of any trading plan is risk management, right? So if you're new to trading stock or options, or you're new to Tradespoon Yellow Tunnel, I would encourage you to have 4 positions, no more than 4 positions. Right now, market can go up, market can go down, right, based on the Fed meeting. Kind of everybody's waiting. We have interest rates sitting on the edge. We have dollars sitting on the edge, small caps, technology. Everyone is sitting on some kind of multi-month support resistance levels. And if those levels are defended or if they're broken, then the market can rally. You know, 5% market can sell off 5%, right? Nobody knows for sure. So you want to be prepared for this. The best thing, I think, in this environment, in the past couple of years, and probably for the next couple of years, the best strategy is market neutral strategies, right? Or if you trade in stock, kind of long short equity funds, right? You pick the best stocks, you know, maybe 2 best stocks or ETFs, and then 2 worst stocks or ETFs, right? If you trade in equities, if you trade in options, you can trade, you know, there are different variety of strategies: cover calls, mirrored put, collar, spread, butterflies, iron condors. But you express basically that the market is going to trade in the range, short term and long term, right? We're not in a kind of a classical bull market. We're definitely not in a classical bear market, and it's kind of every day it's glass half full, glass half empty. For that reason, I propose to have couple bullish position, couple bearish position going into this Fed event, or, you know, till the end of the year, right? So how do you determine position size, right? So let's say you have 2 bullish positions, 2 bearish positions. I propose not to risk more than 2 that are going against you. That's the drawdown is 10%, right? So how do you determine 2.5%? So going into the event, we briefly broke through last 2 weeks lows on QQQ yesterday, right? And retested basically this important support level around 366. Let's just make sure I'm zooming in. Yeah. And you can see the same thing in 1 day, right? Probably need to move this here. So 50% retracement, right? From the August lows to September highs, we briefly broke through the 50% retracement, and we are below 50-day moving average, right? Market is trading below 50-day moving average. So there's 2 possibilities, right? For now, bears are winning, right? Every time market is trading below 50-day moving average, everybody's nervous, right? Especially if it's prolonged movement below 50-day moving average. So on one hand, if Fed sounds hawkish, right, kind of business as usual, higher for longer, we don't really know when we're going to lower interest rates. So start lowering interest rates, and then the market can pull back and at least retest the August lows, right? Potentially even break them. So that's scenario one scenario. The other scenario, you can sound, that we can avoid the recession. Unemployment is strong, economy is strong, inflation is trending down. We're on the right path, right? We're on the right path. So if he sounds bullish, right, or more optimistic, right, then the market rallies, right? So you have scenario number one, scenario number two, right? We go up 360 on QQQ, right? Maybe 2-3% by Friday, and retest this level, or try to take out this level, or we drop. So a lot of it depends on Fed, right? What he will or will not say, the tone, and usually he wants loosening of financial condition or tightening of financial conditions. And based on that, I think the tone and the how he structures his sentences get interpreted. So going into this event, you can say, listen, Vlad, you can say one, right? Because recession, there are no signs of that recession is imminent, right? And unemployment is still in good shape. And you say scenario number one. Sharky, welcome. Or you basically say scenario number two, right? So I would go through this visual exercise, right? So to determine position size, let's say you want to invest in QQQ, right? Whether it's ARM holding or Instacart went public yesterday, or NVIDIA, you have these fabulous 7 stocks, you have IPO stocks. Retail investors, that's where they're piling into for the most part, right? They're piling into the most well-covered stock, most liquid stock that everybody trades. So which is fine. Then the stop loss is 354, right? If you're bullish and you think scenario number one is going to happen, I propose stop loss 354. So let's say you're buying at 370, right? Let's say you're buying at 370, your stop loss on QQQ is 354, which is about 15 points. Right? If you're going short, right? If you're shorting the 370, if it goes to 380, I also propose to have a stop loss, right? Maybe 10 points. Right? And then always the same position size. So when you maintain your journal, you always want to keep track how many shares you're buying and how much is at risk, right? It's not like you always buying the same number of shares. And I propose not even always the same dollar amount, right? You always, on the $10,000 portfolio, you don't want to risk more than $250 on $10,000 portfolio. And it doesn't matter if you're holding this position for a couple of days or a couple of weeks or a couple of months, still you don't want to risk more than $250, right? If you want to buy something that you believe in and hold it for next 3 years because you believe, let's say, in Instacart IPO or ARM holding, I guess you can put maybe 5% at risk, but then this is something very long position. Still, I propose to use dollar cost average, right? Because Instacart might go up 10%, it might drop 10%. It's going to be very volatile. So this is the rule: $250 on $10,000 portfolio. $5,000 portfolio, it's $125. All right, so 15 times, this is 15 points is a stop loss. So 15 shares, right? So on QQQ, I propose not to buy more than 15 shares. If you're bullish, if you're bearish, you want to short it, okay, same thing, no more than 25 shares, right? Because market can go up or market can, sell off. So that's the risk management, and I would document, right? I would document in the journal exactly why you're trading, what is the event, ask yourself why you get into this position. Maybe because, you think that 50-day moving average is a good support, right? And usually for QQQ, for the past 8-10 months, that has been a great rebound level. Okay, so then you buy it at 50. So that would be the setup, right? And the most well-covered, everybody talks about interest rates, right? Interest rates, the idea, everybody has a consensus that if interest rates break through 3.5, right, break through the 4.5 on 10-year yield, market is going to sell off, right? And 20, global financial crisis to find interest rates at these levels. And the next level is 5%, right? 2006, 2000, you have to go to 2006, basically, to see levels, these elevated levels. And the consensus is that when interest rates jumps and continues to go higher, that's not good for the economy, right? It's not good for the companies, for technology companies, for general market. And we are sitting kind of on the edge, right? At 4.3, that's to the penny back to 08, right? 08, 09. And then anything above that, there could be extension to 5%. So if the interest rates does jump to 4.5%, 5%, I would wait maybe till Thursday or at least Friday, right? Because the announcement is 1 p.m. today, and bulls and bears going to fight it, right? Because some people think interest rates are going higher, some people are going to think that interest rates are going lower. But if it's going higher, in general, that would be bearish for the market, and I think you could have a sharp pullback to the downside. If the interest rates pull back, I think the main support I would watch for is, after the announcement, is 4%, basically, right? This is the previous breakout, somewhere between 4.08, 4%, right? So for the market to at least rebound and retest recent highs, you need a pullback back to 50-day moving average. That would be bullish for the market, right? So if by Friday we're at 4% or below, I think you will see 2 to 3% rally in the market. If the interest rates jump, to 4.5, 5, that would be negative for the market. So I would pay attention more to interest rates, especially now. I mean, I've been saying that for the past 2 years, but now more so than ever, you want to keep an eye, because it's just everybody talks about. This is going to be one of those herd effect where everybody's going to follow the crowd, right? Interest rates jump, market is going to sell off. Interest rates drop, market is going to at least rally short term. So that's the most important thing I would look. I would look at the dollar. I do look at Instacart and ARM, right? They are kind of, they rally, right? IPO at 30, rally all the way to 43, right? 30% rally, and then immediately pull back. And same price action with ARM. So it's basically trading around the IPO price. If we're in a bull market at these stocks, such a anticipated IPOs that people waited for years, right? Everybody wants to get their hands on, and very small float, right? Very small percentage of shares are being dedicated. If they cannot rally, right? If they cannot rally, that means that the risk, people are concerned, and the risk appetite is small. All right. Any questions so far? Mark, good morning. Fred, Faust, good morning. John. John is back. Yes, Fed. We did mention Fed today. John probably came a little late, but Fed. So 2 p.m. Central, 2 p.m. Eastern, 1 p.m. Central. The expectation, I think 99, that's just very interesting how probabilities work, but 99.9% that they will not increase the interest rate. That's kind of universal consensus. November, I think it's pretty much flip of a coin. They may or may not, just depends on the data. But at least for now, the consensus is that interest rates are on hold. If they're going to increase by 25 basis points, that I think is going to be a negative surprise, right? So that's the Fed decision, and that's what I would be watching for today and kind of prepare. I wouldn't put on new positions. I would trim positions, right? You want to rebalance your portfolio. If you said one market going higher, okay, trim some bearish, maybe, trim some bearish positions, right? I wouldn't add to bullish position. If you think it's bearish, okay, take some profits on bullish positions, right? If you think we're going lower. But this is more just a rebalancing your portfolio and expressing your opinion. If you have no idea what's going to happen, then you just, nothing really has changed, so you keep the same positions. John, yes, stops strong trading flood. Jeff, what do you think of Disney and LRCX? Disney's in the news, right? They're basically, I think yesterday said that they're investing, I don't know what the number is, 60 billion, some large number of money into the theme parks. We're retesting pandemic lows, right? There's nothing good about this pairing, especially that if you think market is bearish and we haven't reached the bottom. So I don't think we have reached the bottom. I think there's more room to the downside. Disney is sitting at 2020, pandemic low. I mean, if I have to guess, it's going to take it out, right? And I don't know where the bottom is, right? You probably have to go to 2007 to find the bottom in Disney. Well, there is no bottom, right? If we take out this level, then it could be in free fall, right? We could drop, I don't know, 60, 50, anybody's guess. I would stay away from Disney, at least for now, right? You have a drop in August. We had that. Then you have kind of a small rally. We're not taking the highs, not taking out the highs. We had that, right? We had a pretty sharp pullback in August. I don't know what it was, 5%, 6%. We had a rebound in August, and then now we're seeing kind of a start of a pullback, end of September. So at least for now, assuming there is no new information, right? Powell is not going to say anything new. There's no surprising inflation data, no surprising macroeconomic. End of September, first couple of weeks of October, expect more volatility and lower lows and lower highs, right? So Disney, for now, would stay away. LRCX, I would also stay away. I mean, unless you want to short it, right? Kind of double top, not breaking out. Earnings is in 30 days, at least until maybe they're going to have great earnings, right? If you have a strong opinion on earnings, maybe a couple days prior to earnings you can buy, right, in the next 30 days, which would be end of October. I guess that could be a trade. But until now, I think semis are actually, I think, breaking down, right? You can see double top, very similar price pattern to LHCX. They didn't take out the August lows, so I wouldn't short it now. But if we do take out August lows, right, like some of the other sectors, then I would short. But this is an important level. We retested it yesterday. We'll see what's going to happen, by Friday. But both. The tide lifts or sinks all boats, right? Most boats, right? Maybe not all boats, but most boats. And I don't think Disney or LRCX are going to be exceptions. If that hawkish forward-looking comments, we could, question is, could we lose 5% on S&P? My opinion that August lows will not hold. Right, there's really no positive catalyst, at least until the earnings. Right, everybody expects GDP to be 5%. We talked about that. Everybody expects that the earnings are going to be better than expected. Right, so that's kind of already factored in. But nobody expects that interest rates are not going to be lower than 24. Right, the consensus is that first half, before it was end of this year, that's not happening. Now consensus is first half. That's what's factored into the market. If Powell makes an indication that we should not expect lowering of interest rates first half of next year, or potentially not in 24, like Lagarde said, and if interest rates do go up, the 431 level will not hold, and I think it will not, because there's no indication that inflation is subsiding. Right, energy prices are going up. And as long as the target is 2%, we're probably not going to achieve 2% target in 24. So if we're not going to achieve 2% target in 24, that means the interest rates will not be lower than 24. And most people don't believe that, right? That's the contrarian belief. And if at some point, based on these press conferences, that consensus is kind of accepted, then we will take out 431. So 200-day moving average is probably where we're gonna stop, which is around. I mean, we're pretty far away above 50-day. Sorry, let's switch to 1 day. So that's why I said put stop losses 432, because the next level is 200-day moving average, which I think that's the low for this year. Maybe not next year, but for this year, 416, 420. So 444, 420, 25 points. It's about 5%. So we could drop 5%, maybe not in one day, but a couple weeks, couple months. We could drop 5%. Right? I mean, I think we could actually drop. I mean, depending on what is said, 200-day, we could overshoot 200-day moving average like we did in, utilities. Right? I thought utilities will hold 200-day moving average in consumer staples, but, well, not utilities, consumer staples. Right? Looked like a pretty strong support, but we didn't, right? We didn't, and we are far below 200-day moving average. All right. Any questions? Yeah, thank you, Bob, present. Thank you, Fred. Would I say Netflix is the same as Disney? Well, I don't think it works. The chart pattern is, Netflix chart pattern looks a lot better than Disney, right? It's not at, pandemic lows. So the chart looks a lot better, right? The chart looks a lot better. It failed to break through 50% retracement of the previous bull market to the lows, July lows. So it failed at 50% retracement. It's trading below. So not a great price pattern. I think I probably would not going to take out this level for 36,480. So there's little room to the upside. There's more room to the downside. And, and it has negative news, right? Negative news below 50-day moving average is trading below August lows. So next level is 370, right? So I wouldn't be surprised to see 370 in the next few weeks. But Netflix is weaker than QQQ. At least QQQ is close to 50-day moving average, where Netflix is far below. So Netflix, it's not as bad as Disney, but it does look bearish. Good, thank you. All right. All right, so in terms of my positions, bullish positions, I'm bullish XLU, right? Just put on the spread. I think, again, utilities are vulnerable. If interest rates jump to 5%, utilities will pull back. But I still think it's extremely oversold. It's below 200-day moving average, below 50-day moving average. It pays you dividend of 3%. Right, and I think we're probably not going to take out the bottom. So I can step, if we drop to 61, $3. If we drop 5%, $3, you don't want to be down more than $250, right? So if you have 100 shares and we drop $3, you're going to be down $300. That's how I would look at this position, right? So we have $3 to the downside. I mean, we could revisit 2023 highs, right? Maybe not immediately, but by November, December. So you have maybe 5 points to the downside. You have 3 points to the downside. I think this is a good setup. So that's XLU. Still bullish on LA Lilly. Kind of a small pullback. It's still staying above this reactionary low, right, after the earnings, above 50-day moving average. So far, I'm bullish. LA Lilly and CVS, right? Those are my bullish positions, CVS, LA Lilly. I know some of you have been trading the AT&T. AT&T is also very good pattern, right? Similar to utilities, extremely oversold. Decent earnings, decent news on the cash flow, and trading above 15, right? As long as it's trading above 15, that's also bullish. Okay. Any questions? On the bullish positions. All right. In terms of The rest of the positions. So we talked about CVS and Eli Lilly. I'm still bullish CVS and Eli Lilly. You can see these under positions in Elite Circle. On Yellow Tunnel, you can see it under Dynamic Power Trader. You can see it under the Dynamic Power Trader. I did trim yesterday QQQ, right? I trimmed short QQQ position because, I mean, short-term market is oversold right below 50-day moving average, and it gave up half of its gains, so it is oversold short-term. So I did trim half of the position, but still short because I think the path of least resistance is to the downside. October 360, 340 put spread. So that's kind of my main hedge for this, for the Fed decision. SH, one way to hedge, you can buy PSQ, you can short QQQ, or you can buy SH. They're very similar trades. I would just pick one based on your experience and based on your comfort level. So SH, you basically hedge in your entire S&P 500 stocks. If they go down, then for every percentage point spiders go down, SH is going to go up, right? So it's a hedge. TLT, right? I mean, it's extremely oversold. It's sitting at the multi-year low. I'm bullish on TLT, but I do realize that short term we can have this overshooting, right? The consensus from everything I read, even if we do jump to 5%, it's not going to stay there long. But everybody said that at 4%, and it's still. But anyway, you could have one of the reaction is that for next week or two we can jump, right? Kind of this final blow off that phase, and then we drop. Especially if there's the signs of recession, right? We talked about this. Right now we're trading where people are selling treasuries and they selling QQQ, right? As if the inflation is number one concern, and it is number one concern. But if there is going to be signs of recession, which we don't have right now, but if they do appear, and I don't know what that tipping point is, maybe it's leading indicator, maybe it's manufacturing, services PMI dropping below 50%. I don't know what the trigger is, but at some point, if there are signs of recession, that dynamic can change, right? Then interest rates go down and QQQ still sells off. That's possible, but I think you need kind of at least more than majority of the people believe that recession is kind of imminent. Right now, that's not the case. So that's TLT. I'm bearish on XLF put spread. Using XLF put spread, 35-30 put spread. Banks are sensitive to interest rates. Pretty sharp pullback in August, below 50-day moving average, below 200-day moving average. It rebounded more than 50%, recovered more than 50% of its losses. It's all about Fed, right? I still think we can revisit the August lows. So for now, I'm bearish on XLF, and I'm bullish on XLU. Any questions? Right, let's see what is going on today. So interest rates did pull back slightly, right? Nothing major. TLT is slightly higher, 0.5%. Dollar is slightly lower, but still at elevated levels. VIX complacent, right? 13. So not a lot of small caps bouncing back right there. Briefly took out August lows, right? Another sector where you can see that like Netflix or small caps, they're overshooting, right? Overshooting 200-day moving average. But not very weak rebound as well. So right, not a good price setup. in small caps for the bulls. Same thing, I think ARK Innovation still holding August lows, but approaching, let's see. Silver continues to trade higher, up another 1.5%. Right, so people who are buying silver don't think that interest rates will drop. No, they're not going to go up, right? The interest rates are not going to take off. So there's buying interest in silver and gold miners. Again, going into the event. We're still below 200-day moving average, still a pretty bearish price setup. Germany, Europe bouncing back. Copper bouncing back after sharp sell-off yesterday, also pretty bearish, below 200-day moving average. Gas pulled back. KRE, I think, also took out August lows, right? So KRE, pretty bearish setup. And crude oil, kind of vertical move up and not breaking out. Victor, thank you. Opinion on Tesla move. I think it's overdone, right? This is again upgrade. Artificial intelligence, right? They're going to be the leader of that artificial intelligence. And again, I think the AI trade is on hold, right? You can see it in the price of NVIDIA. Right, below 50-day moving average, you test in August lows. You can see it in the price of AI stock. 200-day moving average, Palantir. They're all kind of this AI. The idea of AI is great, but it's a little bit overdone. So at least for now, it's on hold, right? Maybe till the end of the year. So my opinion that Tesla is not going to go too far from QQQ. And if I have to guess, probably lead it to the downside. For now, it's above 50-day moving average. It's better than QQQ, but I still think it's overbought. So I would not chase Tesla trade. I'm long AT&T. Question was on Verizon. In Verizon, AT&T usually don't go that far apart, right? I like AT&T better, chart pattern better. Right, let's compare to AT&T. So AT&T is actually underperforming Verizon, but it looks like it's trying to converge. So actually, Verizon chart looks better. Well, since May, it's probably lately it looks. Let's look 1 hour chart. Yeah, if you look at the 1 hour chart, it's outperforming Verizon. So it's kind of convergent, right? It diverged on the news of these lead inside of the cables, and that AT&T will have more than Verizon, or Verizon has less exposure. Now it looks like they have similar exposure. So at least right now the momentum is behind AT&T on 1 hour chart, right? On the past few weeks. You zoom out, Verizon is better, but you just they usually trade similar, but based on the news, there could be divergence, but eventually they converge, right? Eventually converge. So I wouldn't be surprised that AT&T actually takes over Verizon. Again, very sensitive to interest rates. You probably want to, same thing. If interest rates jump to 5% and utilities are very sensitive to high interest rates, then both AT&T and Verizon will pull back, right? They will pull back if the interest rates jump. So that's the risk. But they both pay you some enormous amount of dividend, right? 8% dividend. They're probably not going anywhere anytime soon. So it's a good place to hide, I think, for now. Any other questions? Any of the stocks? All right, so 1 p.m. In terms of earnings, we do have FedEx. again, FedEx is a pretty volatile stock. It did pull back. In general, transportation has been weak. That's the sign of recession, right? When your railroads sell off, your airlines, UPS, FedEx. So it did take out 2023 high, right? Previous high, kind of trading lower, and it retesting 200-day moving average, right? And took out the August lows significantly, right? So transportation is one of the weakest sector, right? Transportation is one of the weakest sector. Usually that's a sign of, that recession is coming sometime in the future. So FedEx, again, a lot of it, strike price matter, right? If you trade in one contract of FedEx, right, you're buying a call, you're selling call spread, put spread, just remember, if the trade goes against you by 1%, you're down $250, right? If it goes down 2%, it's $500. So that's how I usually look. Is it something I want to trade? So if you have $10,000 account, I probably wouldn't want to do it because, again, we've seen that even though implied volatility is higher than the historical volatility, you could overshoot by 2 to 3%, right? Like last time we did Oracle, right? Oracle overshot by 2% to the downside. Okay, I'm down $250, right? Because it's a $100 stock, so that's okay. But if FedEx overshoot to the downside by 2.5%, then it's not okay. So on $10,000, I would not do FedEx. On the on the $25,000 account, okay, 2%, that's $500. That's less than 2.5%. I think it makes sense to trade, right? So you go to trade, type in FedEx, multi-legged combo, expires today, Friday. I think the risk is to the downside, so maybe just do call spread 250. It usually can move up to 10%. So let's see, 275. Let's see, 275 call. Sell to open 56 cents. So it's about, oh no, we need dollar. Let's see. 1% is 10 cents to $1. So it's 20 basis points, right? It's 20 basis points. So 10%, right? FedEx can move 10%. Let's look. When was the last time it gapped up? March. How much did it gap up? 11%. So right, so it could gap up 10-11%. On the downside, actually more. Here's the gap of 21% last September. Last September, which wasn't really good. So I probably wouldn't do the puts. I would probably, for that reason, I would not do the puts, right? Because the implied volatility only gives you 10% move, right? 252, 10%, 25, 275, right? If you do 225 put, especially in this market, especially after first of all, I would wait for the FOMC meeting, right? The volatility, I think, will increase. So you're going to get more premium probably after 1 p.m. So I would wait. But 225 put, right? So 10%, you get only 20 basis points, and you see last year it dropped 21%. So when I see something like that, then especially in the recent history, I wouldn't do puts. So I would definitely maybe stay away from put spread, especially if you think market is neutral or bearish. Right, retail sentiment is very important, right? Because that's who's buying all these out of the money puts and calls. It's not institutional traders, it's not hedge funds. This is, you're trading against, right? Going back to game theory, you're trading against other retail investors. The most popular trade is buying out of the money calls, right? Buying these out of the money calls. right? That's, and hopefully that, you invest $1 and make 5. But, that doesn't happen very often. Same thing with puts. People do buy out of the money puts, but I would, for now, that's usually institutions, right? They're buying these puts or hedge funds, but for now, you're not getting enough premium to take the risk. On the upside, I haven't seen gap in recent history more than 10%. Right? More than 10%. Let's keep looking. FedEx. So 20. So it has moved 10 to 12%. So if they do hit a home run, because back to school sales and everybody's shipping packages, but 275, that would be, we would have to go back to, it would overshoot the previous bull market, right? Because we touched right at the bull market, December 21. So again, I don't think we're going to take out this level. I think if anything, the risk is to the downside, especially with UPS issues, also pretty weak. So that would be the trade. And only if you have $25,000, and I would consider waiting, right? So you buy 270, sell 275 call, and you can hedge. Something like 290 for 7 cents. And 20 basis points, if you want to take more risk, right? 10% is 275, 278. If you want to come closer, you have to take higher risk, right? But I think this price will might jump after the Fed meeting, right? Because VIX should rally after the Powell's going to speak, right? Initial announcement, probably not a big reaction, but then wait for the next 15 minutes, 30 minutes when the press conference starts. And that next 15 to 30 minutes, people are going to digest every word Powell says. And based on what he says, market is going to go up, down, up, down, up, down. And even the closing bell is still not an indication of what the consensus is. Usually, you want to wait till Thursday or Friday to figure out, are we heading higher 5%? Or are we heading lower 5%? All right, any questions? Discord, thank you very much. All right. Meanwhile, yeah, so nobody wants to take big positions. Same trade as yesterday, right? 0.5% up, 0.5% down. We did recover nicely actually from yesterday. We were much lower than 444. Now we closed the gap. So we did touch 440 yesterday. We broke through the 440 and now closed the gap and kind of waiting, right? So you know that next move is either 440 or 450. Right? Arminder, what is my take on Apple? Apple, I mean, a great stock. Everybody wants to own the most commonly owned stock. Everybody wants it. It looks very weak, right? It's below 50-day moving average. It's been below 50-day moving average for 2 months. This is a very bearish price pattern. You need some kind of a bullish catalyst. Up until next earnings, I don't know what that bullish catalyst is. I mean, it's great that it got upgraded on the, perception that there is a strong demand for the new iPhone, but still, from technical perspective, very weak rebound, right? So after Fed, I mean, it's the same thing. I think it can try to regain this level, right? That's one scenario, but I still think it's going lower and taking out this level, right? That's scenario number one. Scenario number two, something weaker. I mean, obviously, there's a third scenario where it just continues to go higher. The case, right? I think we need to at least retest 200-day moving average first. So for now, Apple, QQ, or any QQQ stocks, not any, but majority of well-covered QQQ stocks, I would not, I would sell them on the rallies. Right? I would sell them to the rallies. To day trade, I mean, if you're aggressive short-term trader, you have a clearly defined stop level, right? You have 172. And scenario one is completely possible. So if you want to trade something with a well-defined stop level, you can say, okay, Vlad, great, it's at 177. It's been at 172. I know my risk is $5, right? I can buy 50 shares, $5, that's $250, right? But at least it should retest 190, especially if you think Fed can give you a bullish catalyst, right? Obviously, if market is going to rally, Apple is going to rally, right? If market is going to sell off, Apple is going to sell off. They're not going to diverge. So you could try to capture, you have 10 points to the upside and 5 points to the downside. You could say that this is a pretty good setup. Especially latest news is that the demand for iPhones seems to hold pretty well. So that would be the setup. I mean, I would probably want to wait till this gap is closed, right? You first want to see gap is closed and maybe at least retake 50-day moving average. Or you can just say, listen, I'll do half of the trade now. I'll do half of the trade at 172. And if it breaks, then I'm out. But otherwise, I think this is good setup. The good news that it's not that far away from the August lows, but it didn't break the August lows, right? It's not like small cap stocks, but that would be my thought process. Personally, I would only short it. If it does get to 50-day moving average or 188 or 184, then my personal trade would be shorted here. Because it's a flip of a coin. It can go up or it can go down, and it all depends how people are going to react to the Fed meeting. And I don't know how everybody's going to react. I think they're going to react actually bearish. If I have to pick the side, I think risk is to the downside. The question is, do I think market is, is it going up 5%, going down 10%, or can it just stay here? I mean, I guess it's possible, right? It's been hovering over 50-day moving average for, since middle of August. That is possible. That is possible. It's possible. I think it's the least likely event, right? Most likely events, the way, like if I have to put weights on my opinion, I think, this has the highest weight. This is medium, right? That we're going higher. That's kind of medium. We cover over 50-day moving average like this. I think that's the lowest probability. Possible, but lowest. Main reason is because interest rates are sitting since the global financial crisis. They're not going to stay at that level, right? They're waiting for Fed to say something. And if it's not going to be the Fed that drives this, right? It could be that Fed people are still scratching their heads, right? They're not sure what to do. But then you do have Friday, you have manufacturing and services PMI. And, they've been trending down, both of them trending down. If we have similar prints, especially if the services drops below 50, right? It was 55, 53, 52, 50. If the next print is under 50, that could be the trigger, right, for this large move. But whether it's Fed speech or, services PMI on Friday, I think the likelihood that we're just going to grind sideways, and usually you don't, right? Here is just everybody's waiting for, Jackson Hole, and then they're waiting for the Fed. So I think that's the lowest probability. Arminder, thank you. Jeff, thank you. All right, any other questions? We have a lot more people today. Thank you. So again, for those of you on Yellow Tunnel, same trades, you can find them under Dynamic Power Trader, right? That has all the stock and option trades. FedEx I'm not going to do, so it's not going to show up under earnings just because majority of the people have under $10,000, so I don't want to take that risk for them. I think it's inappropriate. And then Profit Accelerator, you can see my stock trades like LA Lilly and CVS. and SH. Right, it's 9:11. That's all I have. Thank you very much. I will see you tomorrow morning. Again, just usually it's my experience that don't make any large portfolio rebalancing today. Right, market could close 2% up today, and then to something very clear. Right, you listen to the press conference, and if he clearly says, "Listen, we're not lowering interest rates in 24." If he says something as clear as that, then the market sells off. Okay, then I guess you can make a decision. But if he's not going to say anything new, you know, and if you compare the speech from last time, from Jackson Hole up until today, if his speech is the same, you know, kind of higher for longer, data-driven, we don't know what we're going to do, you know, we don't know when we're going to pause, but economy is resilient, and you know, it's same thing over and over again, then I wouldn't react to these price movements today or, you know, up until the close tomorrow, because it's, you know, every time he's going to say something, it's going to go up and down, and then even after the conference is over, people are going to try to digest it. All right, I'll see you tomorrow morning. Thank you very much, and have a great day. Bill is back. Bill, welcome back. That's awesome. Let me know if I need to repeat anything. Angelique is back, so thank you. Right, he will do not raise entry market, will stay sideways. Okay. Angelique, welcome back. John is back. Thank you, Angelique. Both Angelique and John is back, and Bill is back. I love it. All right, everybody's back from vacation. Right, so you can see, and that's kind of, you know, the reason I say that, because that's why usually first 2 weeks of September, people are still on vacation. It's not just Angelique, but most of the people, right? And then when people come back and volume picks up, right? Right now, volume is still low. Right, we're still kind of volume is low. Well, last week it picked up a little bit, right? So last week it picked up a little bit. This week, I'm going to assume it's going to pick even more, right? So the volume should start going higher than the average volume during summer, right? So we should have, you know, start having these peaks of volume like here, right? So the volume is going to pick up, and the price, that's the reason where probably we're not going to stay sideways. Angelique is back, John is back, Bill is back. They're going to start trading, right? And everybody else as well. All right, thank you very much, and have a great day. And Bob, even during summer here. Bob is dedicated. Thank you, Bob. Right. Some of us are here during summer. Some of us are only here, you know, after back to school. All right. Thank you, guys. Take care. I'm glad you're back.